If you run a business in New York, you already know how challenging it can be to stay on top of tax rules and regulations. But did you know that simple record-keeping mistakes could end up costing your business thousands of dollars in taxes, penalties, and lost deductions? Let's walk through 7 of the most common record-keeping errors New York businesses make. And more importantly, how you can avoid them. First, there's not keeping records for the required time period. Many business owners assume they can toss out receipts and documents once they've filed their tax stubs. But New York has strict requirements. For example, you need to keep income tax records for at least 3 years, sales tax records for 6 years, and payroll records for 4 years. Throwing away documents too soon can cause big problems, especially if you're ever audited. If you can't provide the paperwork, tax authorities might estimate what you owe, and those estimates usually aren't in your favor. To avoid this, store your records digitally with cloud-based software and organize them by category. When in doubt, keep records longer than required, especially for transactions that could have long-term effects. Next up is mixing business and personal finances. It's surprisingly easy to blur the lines, especially for small business owners. But if you use the same bank account for both, you'll have a tough time proving which expenses are truly business-related. Not only does this make tax time stressful, but it can also lead to disallowed deductions or even fines if your business is ever audited. The fix? Open a dedicated business bank account and credit card. Track personal withdrawals clearly and use accounting software to keep everything organized. Separating finances makes your life easier and keeps you compliant. A third mistake is failing to track cash transactions. If your business deals with cash, like in retail, food service, or personal services, every dollar needs to be documented. Untracked cash sales or expenses can raise red flags with tax authorities. And if your reported income doesn't match industry averages, you might face higher tax assessments. To solve this, use a modern point-of-sale system, issue receipts for every transaction, and keep a daily cash log. Always deposit cash earnings into your business account before spending, creating a clear trail for auditors. Ignoring sales tax record-keeping is another common pitfall. Businesses in New York that sell taxable goods or services must collect, report, and remit sales tax. Plus, keep detailed records for at least 6 years. Mistakes like failing to track taxable versus non-taxable sales or losing exemption certificates can lead to hefty back taxes and penalties. To stay safe, maintain detailed sales records, store exemption certificates securely, and use sales tax software to file returns on time. Another area where businesses often stumble is misclassifying workers as independent contractors instead of employees. While it might seem like a way to save on payroll taxes, misclassification can lead to back taxes, penalties, and even lawsuits. New York and the IRS have strict guidelines for worker classification. Review these rules, keep contracts for all workers, and consult a tax expert if you're unsure how to classify someone. Losing receipts and proof of expenses is a mistake that can really add up. Even small expenses need documentation. If you can't prove a deduction, tax authorities may disallow it, increasing your tax bill. Digitize all receipts, keep mileage logs, and maintain written records for business meals and travel. Expense tracking apps can make this process much easier. Finally, not preparing for an audit is a risk you can't afford. Audits can happen to anyone, and being unprepared usually means higher costs. Keep your records organized year-round, regularly review your filings, and retain all supporting documents. Working with a CPA can help you spot potential issues before they become problems. The bottom line? Poor record keeping can cost your business thousands in penalties, lost deductions, and wasted time. On the other hand, accurate, organized records keep you compliant, lower your tax liability, and give you peace of mind. Take action now. Get your records in order, use the right tools, and work with professionals when needed. Your business's financial health depends on it.